Alright, what's up everybody? The video you're about to see is another example video of kind of what we do with our elite members video area for our elite members. And I hope you enjoy the video. If you have any questions at all, as usual, tannerstrading@gmail.com, and make sure to like and subscribe the video. I'd really appreciate that. So again, hope you enjoy the video. Alright, what's up traders? Another video here for the advanced video library, and that's ascending triangle breakouts and how to trade it. The ascending triangle breakout, in my experience, is one of the most powerful breakouts. It's one of the easier ones to spot as well, so I felt it was important to talk about it. We discussed it a little bit in the trading course, but I wanted to make a separate video, go a little more in depth on it, so you guys can start to utilize it a little more in your trading. We've done it here and there, but not that often. Most of what we do is focused around reversal trades, but if you're looking to trade some breakout patterns, this is the one to go to, in my opinion. So let's go ahead and get started. So right off the bat, what is an ascending triangle? In simplest terms, an ascending triangle is a bullish breakout pattern that forms during an uptrend of support, so you have the support trending upwards, and a horizontal level of resistance, so the resistance is moving sideways. As I said, it is, in my opinion, one of the most, if not the most powerful and easiest to spot breakout patterns on any time frame. You can find this on the 1-minute chart, the 5-minute, the 15-minute, the 60-minute, the 1 day, the weekly, the monthly, whatever it is, you can find this pattern present many, many times. There are two keys for a pattern to qualify as an ascending triangle. First and foremost, there must be at least 2 levels of horizontal resistance. So you need to see the price 2 levels where it went up and stalled out in roughly the same point at least twice. Second, the price must be trending higher on the support side of things for the most part and setting higher lows. So you need to see higher lows forming. You might have an occasional dip down below the ascending support trend line, but for the most part, we need to be trending upward and forming higher lows. Generally, an ascending triangle will occur when the price is already in an uptrend. So usually you'll see a stock or ETF, it's been trending up for a while, and then the ascending triangle will form. But that's not a requirement. You'll have times where the price is trending downwards, stalls out, then starts to trend up and form an ascending triangle. So this is just a basic example here of an ascending triangle. You can see here, like we discussed, this red line represents the horizontal level of resistance. The blue line represents the ascending support. You can see we're forming higher lows as we trend higher, higher low, higher low, higher low. And then this is the pinching point where you have the potential breakout. So again, horizontal resistance, we have at least 2 points where it stalled out. In fact, on this one we have more. Horizontal resistance, ascending support. You can see how that kind of forms a triangle right there. Another example here for you, we have ascending support, higher lows are forming, horizontal resistance, then we end up getting the breakout right at this point here. So again, ascending support, horizontal resistance, we form the little triangle for the potential breakout pattern. Another example for you, as it says here, you have the ascending support, stock is in an uptrend, sets this high, comes down, starts to form higher lows, but it's not forming higher highs anymore. So on the resistance side of things, we've stopped trending upward. We're now trending horizontally. We come down, though, we form another higher low. We go up, come down, form another higher low, and then we end up getting the breakout right here. You can see the price continues higher. So you can see that triangle that formed right there. So again, you want horizontal resistance, ascending support. So resistance becomes support. As we've discussed many times before, we briefly touch on this in the trading course as well. Oftentimes when major resistance is broken, it becomes a key level of support. This is incredibly true with ascending triangles. A large portion of the time when the key resistance line, that horizontal resistance line, is solidly broken and the price runs higher, once it eventually settles, once that price eventually starts to settle back, it will often find support at that previous level of resistance and then reverse again. So that presents you with an opportunity to where if you trade the breakout play, you could have a second opportunity to trade that one as a basic reversal or support reversal trade, as it settles back down to that previous level of resistance. So if we go and look at some examples here, you can see we have the ascending triangle forming here, ascending support, horizontal resistance. We end up getting the breakout here. We push higher, goes up, and then what does it start to do? Starts to retrace, starts to settle, and then if you see here, it ends up bouncing and reversing again right at that previous resistance point. So that's now a level of support. So if you had traded this one, you entered on the breakout here, you saw a nice strong move, you sold for profit, you waited patiently, it starts to settle back, comes down at that previous level of resistance. You treat it as a support reversal trade. You look to get your entry with a 3 or 4 buy signal,
and then you trade it again for a second time. In fact, you can look down the road here. It even comes down and bounces off that area a second time, or third time, or a second time, excuse me, down the road a little bit. So another example here, this is the one we discussed first. Ascending support, horizontal resistance. We end up breaking out here. We go up real quick. Then what does it do? Settles right back down, bounces off that resistance level. That's now support, runs again, and then it's now, in fact, settling it down again to that level there. So resistance becomes support with these ascending triangle breakout plays. So the buy criteria, what is the buy criteria for an ascending triangle? The nice thing about breakout plays is generally they are very simple when it comes to getting an entry. It's very straightforward. There's no guesswork on your part. With the ascending triangle, we look for a break above the top side resistance point. We want to see the high resistance point in the pattern on the bid. Okay, so we want to see that the high price of that resistance, that horizontal resistance, we want to see that broken, and that price on the bid. Once we see that price on the bid, we enter on the ask. Okay, very simple. Generally, we want the ascending support and horizontal resistance at least somewhat close to pinching. You'll see a lot of times ascending triangles will form, but the two trend lines are very far apart. The closer they are to pinching, the more powerful of a breakout you can get. Okay, so you want them to be somewhat close together. So let's do some practice here. We have two different charts pulled up here, HBHC and IGD. So right off the bat, we have HBHC here. You can see, let's go ahead and annotate first and foremost and spot this ascending triangle that we're talking about. So go ahead and do this. You can see we're trending upward. We're in an uptrend. We end up forming a high at 45.50. Then we settle down. We form a higher low at 40.95. Another high at 45.22. Higher low at 42.30. So we're kind of have a little bit of horizontal resistance present there. I'll go ahead and make that red to represent resistance. And then shorter term, we are having ascending support. Okay, so it's very important that if you're going to be able to label an ascending triangle, that you understand support and resistance, and that you know how to draw trend lines as well. So again, horizontal resistance, ascending support. Where is the key breakout price on this one? Where is the high of this resistance that we can see presently? Right here, 45.50 would be the key breakout price. If you're able to break 45.50, and you see 45.50 on the bid, you would then enter on the ask, which would most likely be 45.51, maybe 45.52. Okay, very simple. As soon as that top price is broken, you look to enter. In fact, we started to test this level again on this HBHC, but it looks like we're going to stall out and maybe head back down and bounce again off that ascending support, but there could be some potential in this one in the coming days if we break 45.50. So that is a very simple example of how to get the buy entry. Let's look at IGD real quick. With IGD, I'm going to pull this one back. I'm going to do it so we can see a little better. I'm going to go to 8 months. And the 8-month chart makes it a little more clear. You can see we have the uptrend occurring. We end up stalling out at 7.001, and then we start to kind of pull back a little bit. We go up again. We stall out at 7.017. We set a higher low. So when we look at this one, horizontal resistance is at 7.017. We'll go ahead and say 7.02 roughly. So we'll just say, we'll keep it at 7.02 to keep it simple. And then you have shorter term ascending support. Okay, so you can see the ascending triangle that is forming there. Ascending triangle. So what would the key breakout price be to cause you to enter this one? 7.017, so 7.02. So if you see 7.02 on the bid, you would then enter at 7.03 on the ask. Okay, very straightforward. You want to break that high price of the resistance. You want to see that price on the bid. You then look to enter on the ask. Let's go ahead and go back to our PowerPoint here. Let's go ahead and scroll to where we were. All right, so what's the profit target objectives with this pattern here? So many individuals, a lot of times you'll read, they teach that the best profit objective for an ascending triangle is taking the widest portion of the pattern, so the bottom end of that ascending support and the top end of that horizontal resistance. and applying that topside. So you kind of reverse it and flip it topside, and that's how much you want to see profit-wise. Now, personally, I find that to be a dangerous profit objective if you rely on it solely without further analyzing other key areas of resistance on the chart. You don't want to just, it can't be that generic where you say, you know what, it's this wide, so I'm just going to go ahead and apply that to the top side and try to use that as a profit target. You need to be aware of where the other key areas of resistance that may end up causing the price to stall out. Setting the profit target for breakout plays is a little more difficult than getting entries. Getting entries was very simple, as we just discussed, but a little more personal discretion comes into play when you set profit targets. You need to be able to understand a chart and break down resistance levels as well. The keys are to understand where the nearest level of resistance are and work from there. So you need to first say, okay, where's the next level of resistance? Before you even enter a breakout trade, you notice the ascending triangle. You say, okay, this is the breakout price. 702 is my breakout price. I'm going to enter at 703 if I see 702 on the bid. Where's the next key resistance point? Is it very close? If it's real close, I might just pass on this. But if it has some good distance, then I might look to trade this one. So we're going to jump again back to HBHC and IGD. And we're going to do just that. So let's go ahead and label first and foremost as practice. We're going to relabel that ascending triangle. Oops. So we have the 45.50. Get as close as I can. There we go. And then we have the ascending support here. We'll just go ahead and leave it red for now, but again, that represents support. Let's just save this so it'll stay on the chart. And then what we're going to do is just take this one back a little bit. We're going to start to pull it back, because looking at the chart here, there's no visible levels of resistance after 45.50. So let's take it back 1 year. We'll start 1 year, then we'll work from there. So take it back 1 year. We look back 1 year, no visible areas of resistance to be aware of. That's a good sign. Let's take it back 3 years. Go ahead and update that. When we take it back 3 years, again, no visible areas of resistance. Another good sign there. Let's take it back 5 years. Nothing visible 5 years. Okay, let's start to jump it up a little bit. Let's jump back 10 years. Sometimes you have to go real far back to find some resistance on some of these stocks or ETFs that have been trending higher. So you notice when we take it back 10 years over in this area, there's clearly something there. We need to take it back a little further, though, for it to show up on our chart. So let's go back 13 years, and you can see after 45.50, the next high to be aware of, the next price high is going to be 53.33. So resistance wise, after we break 45.50, the next area we have to worry about is going to be that $50 half century mark. Okay, that's the next area of resistance. After that, we have 53.33. So it makes it a little more easier for you when you look to set profit targets. Okay, now you understand, you know what? For an above 20 play, HBHC has a decent amount of room to potentially run. So you could look to get this one in the 45.50 range and look to hopefully see it trend up maybe even towards the 49.50 level, right below that $50 resistance point. So that helps you a little better set those potential profit targets when you understand resistance. You see one like this, HBHC has a little more clear path to run. It makes it a little more appealing to trade. Now the other one, IGD, let's jump on that one real quick. It's annotated again real fast. Horizontal level of resistance, ascending shorter term support. Go ahead and save that. And then what we're going to do is the same exact thing. We don't see any key resistance points after our breakout price that we need to look to as potential profit targets. So let's go ahead and take it back 1 year. 1 year. Let's go back 1 year. Again, nothing visible. Let's go back 2 years. When you go back 2 years, you notice it in fact stalled out in this level before. That makes that resistance point even more powerful and a more powerful breakout point. But still, we don't see any key resistance after that 702 level. Let's go back 3 years. When you look back 3 years, you start to see some key resistance levels to be aware of. So over here on the right, we have our ascending triangle with the key breakout of 702. Immediately after 702, we have resistance at 712. We then have some resistance up here in the 720, 730 range, and then again at 733. So if you entered this one at 703, you immediately run into resistance at about 1.1% away from your price, your entry price. You hit resistance again about 3.3% away, and then again about 4 to 5% away. So this is one that I would maybe look to pass on simply because there's so much resistance so close to this breakout price that it doesn't give you that much room to move higher. Now, you could still look to trade it, just keep that tight stop loss like we talked about, but be aware that you have some close resistance, and realistically, you may see this one go up and stall out before 733. So profit target wise, maybe you get to 730. Again, I could be wrong, could bust above that, but we want to put as much things in our favor. And when we look at this chart, we see a lot of key resistance points that could stall out the price. So I would much rather focus on HBHC than I would IGD. Now, both of them could still produce great rallies, but that's just personal gain. That's trying to put the risk and reward in your favor. So let's go ahead and jump back here. Start this up again, make it a little larger. Got to scroll through this. Need to stop doing that. So we did the buy criteria. We did the profit target objectives. Again, the main thing is just understanding support and resistance. Now, what about stop loss? Stop loss, most important aspect of a trading plan. Too many traders trade without it. That's why their account ends up dwindling over time. So very important you have a stop loss. Doesn't change when you talk about breakout plays. One of the keys to making money trading breakout plays is keeping a tight stop loss. It's my experience, and I've mentioned this before, that a majority of the time, usually 60-70% in my experience, you will experience a false breakout on these type of plays. So it'll go up, it'll break 702, maybe go to 704, and then all of a sudden it'll come right back down. Because of this, it is important you keep your stop very tight. Again, personal discretion comes into play. So you want to keep your stop very tight just in case it receives a false breakout. You get stopped out for a small loss, and then you look to re-enter the trade. Some people recommend using the breakout price itself as your stop loss. Now, you can do this if you want, but I personally feel this leaves essentially no room for error. You will have times when the price breaks the key breakout price, falls a cent or two, then rallies. So you could, on IGD, for example, you could have it break 702, you enter at 703, maybe it comes down to $7, and then it rallies higher. That happens quite often. Having your stop set at the key breakout price would have meant you got stopped out, only to re-enter again immediately. So you essentially lose the commission on there when you necessarily didn't need to. Now, there is the risk on the flip side that keeping it a few cents lower than your breakout price could mean you lose the commission and a little bit more, but that's the risk personally I would like to take, because a lot of times in my experience, you see those false breakouts. Sometimes it'll appear like it's a false breakout, come down a few cents, and then it'll end up running higher. So again, generally I want to give a little wiggle room for price movement, but not that much. Okay, not that much wiggle room. And a lot of personal discretion, again, is going to come into play depending on the price of the specific trade you have. So let's look at HBHC, that's an above 20 trade, and we'll look at IGD as well. So HBHC, let's exit out of this. So you can see when we go to annotate on HBHC, actually, no, we don't need to go to annotate on this. When we see the key breakout price is 45.50, you would look to enter this one at 45.51 when you see 45.50 on the bid. And then again, you want to keep a very tight stop. If we utilized, for example, a 1-to-2 ratio, we're going to end up being down in this level here. That's right near that key support. You're better set getting stopped out and looking to bounce it off that support. So if you're looking to get in at 45.51, for example, you could put a stop right below that, right down in the 45.35 or 45.40 range. So it's a very tight stop to where if you get stopped out and it trends lower, you can look to replay it on a breakout and you didn't have that significant of a loss. Okay, very, very tight stop, 5 to 10 cent or so on these above 21s. We go to IGD below 21. 702 is the key breakout price. Enter at 703. This is a key one where you need to be more aware of what's going on price-wise. What's a key level of support on this one? It's that $7 whole number. So you would be smart to place your stop just maybe a cent or two below that. So if it doesn't hold $7, excuse me, if it doesn't hold $7, you know this one has a high chance of trending lower. So you could set your stop at $6.98 or even $6.99. So it gives you a couple cents of wiggle room. But if it falls below 7, you know, okay, I'm going to go ahead and stop out of this one. I'll look to re-enter on a breakout again of that new high resistance price, be it 703 or 704, and try to trade this one again. So the main point is the difficult part with breakout plays is setting the profit target and setting the stop loss. It's not as easy as reversal trades, but the easy part is getting your entry, which oddly enough, that's the harder part with reversal trades. So the main thing again with stop loss, just keep it tight. You don't want to keep it too loose to where if it's a false breakout, you end up taking more of a loss than you need to on these ascending triangles. So let's go ahead and go on here. How to scan for ascending triangles. We've gone over this before, but I wanted to review it. So if you go ahead and go to finviz.com, one of my favorite scanners, finviz.com, it's free to use. You can purchase their Elite, but in my opinion, you don't need to. Just use their free scanner. You're going to go under Screener, which is over here in the left. You hit Screener, it'll pull up this for you. Now we want to go through a few different criteria. That's what we have up here. We want to weed out some of these different potential stocks. So right off the bat, the price. This gives you the power to eliminate certain levels of price. So generally speaking, I'll scan for under 20 or above 20. So we'll go ahead and go under 20. So any stock that's above $20 is no longer going to show up for us. It removes them completely. The next thing we want to do is average volume. Anytime we have an under 20 stock, I generally want to see average volume of at least 300,000. It's over a 3-month period. So 300,000, it's need to be averaged that per day over a 3-month period. Under $20. So we have some criteria. You can see each time we do that, it's eliminating. At this point, we still have 54 pages worth of different stocks and tickers to go through. Still too much. So the next thing we want to do is go under technical. Right next to all, you see technical. Go ahead and hit that. This is going to pull up a whole bunch more different criteria you can go through. What we want to look at is over here, kind of in the middle to right section under pattern. If you hit that, it will pull up a predefined triangle ascending scan for you. Just go ahead and hit triangle ascending, and there we go. It eliminates it down for you. So now we have 4 pages. So what we have here are any tickers that are under $20, have an average of at least $300,000 on a 3-month rolling average, I believe. I believe it's a 3-month rolling average. And they have to be forming somewhat of an ascending triangle. Now, FinViz or any scanner is not perfect, but it does a pretty decent job. So if we go ahead and hit charts, I like to hit charts on this right in the middle because it'll pull up the charts for you that you can see there. You can use candle. Under type, you can go to candle. You can go to line. We don't utilize line charts here, but you could if you wanted to. Or you can go to technical, which is generally the default, so I go ahead and leave it there. So when we look through this, we're going through some of these scans. We can see how it does its best to label the lines for us. Again, it's not going to be perfect. Going through some of these, again, this is where I found HBHC and IGD. We'll look through some of these. You can see right here, AMZA, Amazon. We had the horizontal level of resistance. We ended up getting a breakout, and we ended up seeing the price at least move decently higher there. So that was one that actually ended up breaking out. Shouldn't be showing up on the scan anymore, but again, it's not perfect. AREX, this is actually one that we have on our watch right now, hoping to treat as a reversal trade. Needed to come down a little further, but if this continues to trend higher down the road a month or so, we could have a potential breakout up in this mid 4 to 450 range. So again, very simple, finviz.com. That's the criteria. You can play around with it a little bit, but generally speaking, above 20 or below 20. So if you want to go under 20, you just hit under 20. If you want to go above 20, you scroll down and you hit over 20 right here. Go ahead and hit that. It'll change it for you right off the bat. Over 20 as well, I usually like to take this to above $1 million. Give a little bit more liquidity there, and then it keeps the charts for you. So we have a bunch of ones that are priced over $20. So anything under 20 is not going to show up. You can screen through. And again, what I like to do is when I see one that looks decent, I want to then pull it up on stock charts. Okay, I don't want to rely on the chart that FinViz provides for me. It's not the best. I want to pull it again up on stock charts and review it a little more in depth. So again, finviz.com, great screener tool. Just hit screener and just apply exactly what we did right there to find some ascending triangles. So conclusion, again, like I said in the beginning, the ascending triangle is one of the most powerful breakout plays. We've utilized it a few times here and there. The majority of trading I like to do and I like to teach is reversal trades. I like to get in before momentum is present. With ascending triangles, you're trying to ride the momentum higher. A lot of times you'll see when you see a breakout, you want to see an uptick in volume. It's not vital, but generally speaking, anytime you see a breakout, you'll see volume start to kick up, and then you're part of that momentum wave. So very simple to find. Very simple to break down, but if you happen to be having any trouble, it can seem simple, but if you're kind of newer to trading, maybe you're struggling a little bit with it, don't hesitate to send me any questions. tannerstrading@gmail.com. I'd be more than happy to answer those questions for you. We can go over some examples. We can bounce some charts back and forth off each other to make sure you understand the ascending triangle pattern. So again, tannerstrading@gmail.com. Send any questions you have to there. Hope you enjoyed this video. Have a great day.